The stock market is in a state of crisis. Could it be worse than the 1929 crash? The stock exchange market has been in a state of turmoil since the start of 2023, and many experts believe that this downturn could be worse than the 1929 crash. We're talking about financial giants like Ray Dalio, Elon Musk, and even legends like Buffett and Kiyosaki who are warning investors that a crash is close. First of all, to understand why they believe this to be true, we must look at how previous stock market crashes have unfolded. In 1929, the world was suffering from a stock market crash that started in October and lasted until late November. The Dow Jones Industrial Average dropped from 381 points to 230, a 40% decrease in value. This marked the start of what would later be known as the Great Depression. Today, we are living through a similar situation. The S&P 500 has already dropped more than 30% since the start of 2023, and this could be just the beginning. In fact, some economists predict that it will drop even further in 2024 if no significant actions are taken to prevent a recession or depression. So, how does the current stock exchange market compare to 1929? How can investors protect themselves from this impending crash? In this video, we will be exploring the comparison between 2023 and 1929 and discussing ways to prepare for the worst. Stay tuned. Ray Dalio. Ray Dalio is a renowned American investor and the founder of Bridgewater Associates, one of the world's largest hedge funds. He has recently made a bold statement that the current stock exchange market is worse than in 1929, just before the Great Depression. Dalio argued that although stock prices have not dropped as much as they did before the Great Depression, there are several other factors that make this downturn worse than 1929. He points out that unemployment was higher in 2022 and has remained so for longer than it did during the Great Depression. The recession of 2022 affected a larger proportion of people around the world compared to 1929, making its impact far more widespread. Dalio highlights the fact that this recession has been caused by a lack of liquidity in the market rather than over-speculation. This means that there is less credit available for investment, which impacts the flow of capital and makes economic recovery far slower and more difficult. Dalio emphasizes that the current recession is not just about stock prices. It is a health crisis that has caused economic disruption on a global scale. This global recession has led to significant job losses and increases in poverty rates around the world, making it more difficult for individuals to build wealth and achieve financial security. The current market environment is far worse than in 1929 due to its devastating impact on people's mental and financial health. He believes that it is essential for investors to have a strategy and plan for building wealth that takes into account current market conditions. Dalio's comments suggest that the current market environment is a difficult time for investors, but it also provides an opportunity to build long-term wealth. By being patient and diversifying investments, investors can ensure that they are well prepared for any future downturns in the stock exchange market. Warren Buffett. Warren Buffett is considered one of the greatest investors in history, and his views on the stock market are highly influential. He warned that the U.S. stock market was worse than it was during the Great Depression of 1929. Buffett believes that while stock prices may be high, there is no guarantee they will remain so. He argues that the market is volatile and unpredictable. In addition, he questions whether investors have become complacent and believes they should be on guard against risks. Buffett's comments come in the context of a decade-long bull run in which U.S. stocks have hit all-time highs. The Dow Jones Industrial Average peaked at 381 in 1929 before the Great Depression caused stock prices to plummet. In contrast, today's Dow is well over 24,000. This dramatic rise in the stock market has led some experts to question whether we are experiencing a bubble similar to that of 1929, when investors were overly optimistic and failed to fully understand the risks they were taking. Buffett's advice is to remain cautious and not get carried away by the market's enthusiasm. It's important to remember that while investors can enjoy some success when stock prices are high, they should also pay heed to Buffett's warnings about taking risks and staying alert for any signs of a bubble. By doing so, investors can ensure their portfolios are well protected and remain profitable in the long term. Warren Buffett's cautionary words about the stock market reflect his wisdom and experience as an investor. His warnings should be heeded carefully by investors who want to safeguard their investments against potential downturns. Despite the stock market has risen substantially, it is essential to remember that the market can be volatile and investors should remain mindful of any risks. Robert Kiyosaki. Robert Kiyosaki is a financial guru known for his book Rich Dad Poor Dad, which has impacted millions of people around the world. In a recent interview on YouTube, Robert Kiyosaki stated that he believes the stock exchange market is worse than in 1929 and could be compared to the Great Depression. He claims that this downturn isn't just a financial crash, but a crash of the entire system. Robert believes that the current economic situation is far more serious than most people realize. According to him, it's not just a problem with stocks and bonds, but with commodities such as oil, gold, and silver prices all dropping drastically. He believes that these drastic drops are a result of a broken system that has caused an imbalance across the board. Robert believes that the stock exchange market is being manipulated by wealthy investors who are hoarding gold and silver like toilet paper and guns. He argues that while the poor are told to stay in it for the long term, the rich are getting out sooner than later. This, he claims, is why the physical gold market can't be bought at stable prices. Robert also believes that there are other asset classes that should be taken into consideration as well, such as real estate and cryptocurrency. He states that cryptocurrencies, like the US crypto dollar, have the potential to create a new global economic system beyond what we are currently experiencing. Finally, Kiyosaki concludes by saying that his message to the public is to wake up and understand that the current economy is in a precarious state. He urges people to be proactive and not become victims of the broken system, but rather take control of their finances and protect themselves from further losses. By understanding what is happening in the stock exchange market and taking the necessary steps to protect their investments, he believes that people can prepare for whatever comes next. He recommends buying physical gold and silver, investing in cryptocurrency and real estate, as well as keeping a close eye on government policies to ensure that any losses are minimized. As he puts it, it's time to wake up and be prepared or be left behind. It's clear that Robert Kiyosaki is sending a strong message to the public about the stock exchange market. His warnings should not go unnoticed, as he makes a compelling case for why we should all be paying attention and being proactive with our investments. With his advice in mind, it's important that the public take steps to protect their investments and prepare for whatever comes next. Elon Musk. Elon Musk has recently been making bold claims that the current stock exchange market is worse than in 1929. While this statement may make some people uncomfortable, it is a sentiment shared by various financial experts and thought leaders worldwide. Musk believes that this market crash is worse than 1929 because of the current state of the economy. In 1929, there was no government intervention and no massive stimulus packages to help cushion the blow. The stock market crash occurred as part of a global economic depression, and it took years for people to recover from its effects. Today, we are seeing unprecedented levels of government involvement in the markets. In an effort to prevent a similar economic crash, the U.S. government has provided massive stimulus packages and bailouts for businesses struggling as a result of the pandemic. While this might help in the short term, it could also lead to increased levels of debt and inflation, which could ultimately be more damaging than what happened in 1929. It is clear that Elon Musk believes that the current stock exchange market is worse, and he may be right. We are living in unprecedented times, and it is difficult to predict what will happen next, or if any government interventions will be effective in preventing depression. The uncertainty of the future makes now an especially risky time for investors, so it's important to remain cautiously optimistic and do your own research before making any financial decisions. That being said, the reality is that investing in the stock market today requires a careful eye and an understanding of both past and present trends. While no one can predict the future, doing your own research and staying informed of current economic news is a great way to increase your chances of success, as well as caution. It is clear that the current stock exchange market is indeed worse than it was in 1929. There are a number of factors contributing to this, such as unprecedented levels of government intervention and stimulus packages, as well as the economic uncertainty caused by the pandemic. Thanks for watching. If you have any questions or comments, please leave those in the comments section below. Make sure to subscribe to our channel and stay tuned for more updates. Until next time, goodbye.